What up, guys? It's January 17th, and we're going to go over this market alert. I want to kind of go over what to expect this week. We got earnings season, Q4 earnings season in full swing, so we're going to talk about that. We're also going to talk about some stocks that we're targeting for the account, and one new stock that we added to our watch list that we're very anxious to start a position in, is because this stock has tremendous growth moving forward. Okay, now before we get started, of course, please hit that like button, hit subscribe below. Definitely appreciate your support. Hope that you take something from this, you learn something, and we just have some fun in the meantime. Okay, so let's get to it. So real quick overview here. We have the futures market, or the pre-market action as it's called here on CNBC. We got the Dow down for tomorrow about 0.3%. S&P down about 0.5%, and then the Nasdaq again getting hit. That's your tech stocks, about 1%. That's a pretty significant sell-off. Remember, anything over 1% is significant. Everything over 1.5% sell-off is a significant sell-off, okay, to take advantage of, especially in this market. Of course, I've talked about this plenty of times. We're in a market of opportunity. There's stocks out there, specifically in the Nasdaq, that have been hit 40, 50, 60, 70% from their all-time highs. If you're not looking, it means you're not doing your job, right? You should be looking. You should have a shopping list. You should be nibbling at least at some stocks, at some growth stocks, because right now they're the most hated stocks in the market, right? Anything that doesn't have a price to earnings multiple, meaning not profitable, the market just slashed by about half or more than half in a lot of these names. But we're looking at those beat up names to add, right? Remember, we talked about opportunity and taking advantage of that opportunity. It's time to do so, in my opinion. Okay, now we're also watching the bond market, of course. The bond market currently hitting about 1.83% on the 10-year bond yield. And when that hits 2, these growth stocks are going to get hit even further. The more this goes up, the more these growth stocks are going to get hit, okay? We can always talk about timing the market and knowing what to expect, but it may never happen, right? You have to remember, the more these yield, the more enticing they are to investors, and specifically overseas investors, Japan and Europe, which are big buyers of American debt through bonds. When these go higher, specifically in Asia, which the bonds in Asia yield close to nothing, and the ones in Europe yielding close to nothing, these are very, very attractive to these bond investors overseas, which the more these get bought, the more they push down. So we'll see what happens, right? Anything can happen there, but we're looking for weakness. We're looking for this to move to 1.9, 2%. Wouldn't be surprised if that happens, and then tech stocks get hit even further. But at the same time, you never know. So that's why you got to be involved and at least have some skin in the game at this point, all right? Now, talking futures here, we have Asia, we have the Nikkei. We had it down about 0.2%, 0.25%. Shanghai is actually up. The Hang Seng, that's Hong Kong, that's down 0.6%. Okay, so that's pretty significant for Asia. That's a pretty significant move. Sort of mixed at the moment, in my opinion, but we'll keep an eye on those, before the market opens. Now, moving on, we're going to talk about earnings. Okay, this is the earnings calendar for next week, brought you courtesy of Earnings Whispers. These are pretty good guys. Thanks for doing these calendars for us. Very helpful. Okay, and we're watching a few things starting Tuesday. Goldman Sachs, of course. We want to listen to that conference call to get a good grip of what they think of the economy, of how they're doing in their investment portfolio, how they're doing with real estate, etc., right? This is a very good call to listen to because it gives you sort of the climate of the market. Also, Charles Schwab is another one that you might want to listen to. I think that I'm very curious to hear from them how the retail investor has fared in their accounts in this sort of high inflationary, higher rate or higher expectation of higher rates and sort of environment. So very curious to hear that. Nothing else here interesting here for Monday morning, but of course we want to listen after the close to JB Hunt. That's of course one of the biggest or the biggest trucking company in America. Very curious to see what they have to say about chassis, about all their crates, all their boxes, all their semi trucks. What are they doing? What are they seeing here in the States? I'm very curious to hear about that. I think that'll be a very telling conference call. Definitely something you want to hear if you're interested about supply chain here in the States. Okay, now nothing else here interests me for Tuesday. Now moving on to Wednesday. Now Wednesday after or before open, we have Bank of America and Morgan Stanley. Important to hear those. The banks are always very important. They've been performing well, these banks, okay? And the expectation of higher interest rates, it's probably going to shoot them higher. How much higher, you never know. But Bank of America, it's probably one of the better banks out there, along with Wells Fargo. That would be my two top banks that I like at the moment. Not invested in a bank. I do have financials, of course. I have PayPal, also have Rocket Mortgage. So very interested to see here what they have to say about their business and about interest rates, and keep an eye out for those. Okay, so Morgan Stanley, of course, it's another investment bank, very high-class investment bank, kind of like Blackstone Group, which we used to own for the account. Also important to hear those. Here, I'm not very interested in this. Maybe United Health might be an interesting call to listen to if you're invested in Teladoc. Anything that's health-related now, very interesting to me. Definitely something we want to be informed in when we're owning a healthcare stock, sort of tech stock, like Teladoc Health, okay? Of course, then moving on to Fastenal. Fastenal's one when it comes to construction, home building. They do all kinds of things for homes and all kinds of tools and fasteners for home building, right? These guys are the one-stop stop for that kind of business, like KB Home, Toll Brothers, Lennar, etc. Very important to hear if you want to know the health of construction. That's where you go, okay? And then U.S. Bank, not interested in that one. Prologis, that is a real estate investment trust, and that's a data center REIT. Very good business. It's usually pretty overvalued in my opinion, but it does pay a healthy dividend. If you're interested in real estate investment trust, definitely one I would recommend you listen to as far as the call, okay? Nothing else here really interests me for Wednesday after the close other than United. United Airlines, of course. If you're an airline stock, man, my heart's out to you because these are so unpredictable, but you want to listen to all of them. Even American Airlines here reporting on Thursday before they open. You want to listen to all the calls because the health of airlines is such a roller coaster thing, especially nowadays. I think more than ever. So if you're invested in an airline, you have my full support. But reach out if you need any help, okay? I'd be definitely love to help you and answer questions about airlines there, okay? Now, moving on to Thursday, we talked about American Airlines. Union Pacific, that's another supply chain stock that we have to listen to get the overall health or the feel of the overall health of the economy. That's, of course, a train stock. And then nothing else here interests me on Thursday before the bell in the Now, after the close, we got the big one, a big dog. We got Netflix reporting. That's always huge. Netflix is always a huge stock to listen to. It's always traded on subscriber growth, but I feel like shareholders want more now. I feel like they want that profitability to come through. I want the cost to come down because it costs a lot to produce a movie, to produce a series, a 12-episode series nowadays. Probably much more than the movies because the demand for those shows is so high, but also the quality of those shows is very high and competition is getting tight for Netflix. A lot of competitors out there now. This is not 2015 anymore. Lots of players in that field, so Netflix has to deliver something more than subscriber growth, in my opinion. I think that whoever doesn't have Netflix anymore is probably never going to get it. And there's very few people out there who are like, let me consider Netflix. Very few people out there that are left for Netflix to actually sign up as customers, okay? Now we have CSX, that's another train stock, also very important, same thing as Union Pacific to listen to. Nothing else interests me here on Thursday, and on Friday we have Schlumberger is how they say it. That's an oil stock and like a tanker oil stock. Very, very important if you care about oil prices to listen to these guys. Everybody who complains about high gas prices, this and, the government and this. Listen to these conference calls first, okay? And then make your opinion as to why oil prices are so high. Hear from the CEOs, then develop your opinion, okay? Now, that's it for this week coming up. Now, I wanted to go over a couple different stocks in my portfolio that I'm targeting, and then, of course, the one that we're gonna be looking at in a watch list to buy hopefully pretty soon, or as a substitution, kind of like a swap candidate. Okay, but we're gonna start with Draftkings, which we've been targeting for the account, and this one's been a little bit of a pain lately. Okay, but I treat this as a huge opportunity for the long term. Draftkings is a leader in its field. And at an under $10 billion valuation, I think that in a 3 to 5 year time frame, this is a steal of a stock. With the openings in New York and Oregon, I think that this company just gets closer and closer and closer to profitability. They have been not doing well on the profitability front. Here we got $3.62 of EPS. Last reported negative, right? That's a loss. But I can see this getting better and better and better. Here, the analysts, you can see this year they're improving. The average estimate is $2.48 of loss. Of course, nobody expects them to be profitable in 2022. But if they beat this expectation, I can see DraftKings reducing the size of the road to profitability, which is what we're in the stock for. We're in the road to profitability. We know that it's not profitable yet, but under $10 billion for a company that could be worth 50, 60, 70, $100 billion in the next 3 to 5 years, we're okay with this window of opportunity on DraftKings. Now, moving on, Honest Company. I've already talked about this. I did a video on Honest Company. Man, under $7 a share. What a steal. What a steal of a business. This is something that's going to keep growing. This is a good business with solid fundamentals that has a good growth rate. And when supply chain issues clear, watch out. This is very close to profitability. I think that this year, let's look at this here. This year they're looking at, the high estimate is a loss of a penny. That's the high estimate. Average estimate is a loss of 12 cents. If they beat that, the road to profitability is right here. Is that close. Once it becomes profitable, watch out, guys. Okay, now moving on to Teladoc Health. That's one that we're targeting heavy, right? I think heavier than Honest and DraftKings, because this has a huge potential for the future. This is sort of like a savings account in which you put money and you just let it go. You don't look at it for 5 years, because this company can make a ton of money over the next 5 to 10 years and become a leader in its field, even though there's a lot of competition. But who knows what that competition is, right? Like if somebody who's not invested in stocks thinks about Teladoc and knows what they are, I bet you they can't come up with any competitors, right? So this has a brand name to it. Their acquisition of, what's the name of that company they acquired? Livongo, yeah, Livongo. So when their acquisition of Livongo, getting into these digital healthcare products for diabetics, for heart patients, I think that is huge for them. That's a huge growth vector to make healthcare more digital, more accessible to everybody. Kathy Wood called this not a stay-at-home stock. It called it a stay-connected stock, a stay-competitive stock, which is what I think Teladoc Health is. So very happy with this position so far. We already pushed it under $100 in our cost basis. So we're down $20 on it. Oh well, who cares? Let's keep lowering our cost basis on Teladoc, guys. Now, moving on. We got On Holdings, which is On Cloud Shoes. This is a shoe company with running shoes for men, women, and kids, okay? So this stock has been beaten up on a 1-year chart. If you guys see here, it IPO'd somewhere in the 38 to 40 range, and now it's trading at $28 a share, right? So it's a pretty new company, and it's been beat up tremendously with an amazing growth rate. Check this out, guys. We see the growth rate here, almost 40%, 37.9%, 38%, call it, growth rate in 2022, and it's trading at an $8.5 billion valuation. These guys are bringing in north of $600 million in revenue every year. That is interesting. That catches my attention. And of course, profitable. That's very important. But you see that PE ratio of 500. That is a huge PE ratio, but that's because they just barely became profitable. Now, as they get more profitable, that PE ratio starts to compress, right? Especially as the share price drops. I'm hoping that this falls under 25 so we can start building a position. Maybe under 26 would be a nice foot in the door position, but under 25, I'm very anxious to buy this stock heavily, and then hopefully it goes under 20 to just load up shares on Holdings. Okay, so that's my new stock that I added to my watch list. Remember, I haven't bought anything, but I'm going to keep an eye on this one. I'm not fully done with my work, but I like what I see. I really like what I see from On Holdings, guys, okay? And of course, let me know if you guys have any questions moving forward, okay? Please visit us at the Stock Gladiator Discord. I'll drop the link below. Also, Instagram. Hit me up here on YouTube on the comments below. Peace out.